Good afternoon, everyone. Hope you've had a good lunch. We'll try to make it interesting for you since it's the session right after lunch. My name is Amol Patel, and I head emerging markets in PayPal's mobile group. And I'm delighted to have with me as part of this session Elizabeth Bertha. She flies here all the way from Nairobi, Kenya to join us in this session, and she'll be talking about micropayments as well as some of the interesting things that the Grameen Foundation is doing in emerging markets. So just to quickly walk through the agenda, I'll be talking about the emerging markets opportunity, what are people doing there in terms of mobile payments. We'll talk about some of the solutions that PayPal has in this space, how we see our role in the mobile ecosystem in many of these developing countries. Then I'll hand it over to Elizabeth to give us some of the ground realities of what it is, what is the environment that you, the developers, would face if you were to look at building applications or services, value-added services in these developing markets. She'll also walk us through Mpesa, which has arguably by any stretch of imagination been a runaway success in mobile payments in emerging markets. And then we'll leave the last 10 to 15 minutes for questions and answers. So why should we care about emerging markets sitting here in Silicon Valley? Well, frankly, that's where the growth is. That's where the opportunity is. If you look at global relevance, especially for a company like PayPal, where our aspiration is to be the world's favorite way to pay and be paid, over 85% of the population resides in emerging markets. So that's very relevant from a PayPal perspective. If you look at the growth rates for GDP in these markets, then you've got developing markets that are averaging around 10 to 12% growth rates, and you've got developed markets that are around 4 to 5%. So clearly that's where the opportunity is going forward. So what are some of the common characteristics of these emerging markets? Well, clearly the mobile is the first screen as opposed to kind of the third or the fourth screen that we have experienced here in, say, a market like North America. So this is the first interaction for people to the internet, to information sources, and that plays a very significant role throughout their life cycle as they start to adopt technology. 85% of new mobile subscribers are coming from emerging markets. 60% of the roughly 4 to 5 billion mobile phones that are in the world today are in emerging markets. So what do people do? How do they get money in and out of the system these days in these markets? Well, if you look globally, only 15% of the world has a bank account. And in some of these emerging markets, there's less than 5% of the population is banked. So the usage of cash is significant. And there are ecosystems that have already developed to do the KYC, the Know Your Customer norms, moving cash into kind of an electronic system as they do with airtime top-up in these markets. So the combination of mobile phones, mobile access, as well as cash, replacing cash is really the big killer opportunity in these emerging markets, and we'll walk through some of these use cases. So what are these people doing, right? So the use cases that are likely to evolve in the emerging markets are not going to be fundamentally different from what you see in developed markets, except that the access channels will be different. There are a few nuances. For example, 90 to 95% of these emerging markets are prepaid. So unlike the postpaid contracts that we have here, it's a pay-as-you-go model. So you pay for airtime at the local convenience store or the corner kiosk. You replenish about, say, $5 to $10 a pop every 3 to 4 weeks, and you enable the phone for airtime, and then SMS and texting and things like that. So airtime is a big use case. Microfinance, the ability to disburse microloans, $50 to $100 loans to the very bottom of the pyramid. That's an interesting use case that is being experimented and getting developed, where you don't need to have a loan officer go into the rural villages, but instead you use a mobile payments solution to disburse those funds, as well as the repayments that happen on those loans can come directly through the mobile device. And then if you dimension it, that's more on the remote payment side. And moving forward, we're also starting to see a lot of innovation. For example, in Brazil, Oi Pago launched a merchant payment service, kind of face-to-face transactions and things like that. So there are a lot of interesting pilots that are happening in the mobile money space all over the world, and we'll share some success stories with you. So what is PayPal's strategy in this from a mobile perspective? Well, clearly our vision is that the wallet would reside in the cloud, and it does not matter how you access that. It could be through a smartphone application on an iPhone or Android device like we have here in North America. Hopefully most of you have used our PayPal iPhone application, or a BlackBerry or an Android application. But there's also solutions. We've got an SMS solution where you just text money to someone's mobile number or an email address. We're working with partners globally who are building USSD-based solutions, because most of these markets don't have, at least 95% of the markets don't have users using an active data plan. So there are these alternate technologies on which PayPal would work just as well. So if you look at how PayPal envisions its role in the ecosystem, well, as I was saying, these are large cash-based economies. So there are partners that we're working with who would bring the cash through by doing the KYC and things like that, which can just load up a PayPal account. And then the power of the PayPal solution, which is it being funding source agnostic, whether you're loading up a prepaid cash card, you're loading up using your bank account, or you're using a credit card, the users have the choice to use whatever funding instrument that they want. On the payment side, some of the interesting success stories that we see in emerging markets, whether it's the Philippines with smart money or GCash, or if it's Mpesa in Kenya, these are all kind of operator-led schemes, and almost by definition, they are in a sense closed loop, that they don't really interoperate that well if you are a mobile subscriber of another operator. Whereas from a PayPal standpoint, we work across all operator networks. We work across different financial networks. So it really is very powerful, both from a merchant deployment standpoint, that they don't need to have separate integrations to these different mobile payment systems, as well as from a consumer standpoint, they have the choice to use the funding instrument that they want without having to worry about whether their phone would work with a particular payment system or not. And from a funds out perspective, we have a global merchant base of over 8 million merchants, and this is even more relevant in emerging markets, where the long tail, 80% of the payment flows in these emerging markets happen through sole proprietors, small businesses, and PayPal historically has worked very well in that long tail segment. Whether you look at our beginnings on eBay, where small sellers on eBay wanted to accept payments and they could not establish an acquiring relationship with a card network, so they accepted PayPal. So the analogies are there in the emerging markets, in the physical world, where the mobile device is the primary access device that these users have. And the beauty of the PayPal solution is, from a merchant standpoint, or an operator standpoint, a bank in any of these emerging markets, there is no kind of upfront cost that they need to invest in as a platform. PayPal's a pay-as-you-go model, so it's really the economics get shared only on a transaction basis. So with that, let me hand it over to Elizabeth to make it more real and take us to Africa.
So why is an NGO standing up here? I work for an organization called Grameen, and we're only about 166 people working in 38 countries around the world. We're working with people who earn 18 cents a day to corporations, helping them understand how they can take their products and make it more relevant for markets. As we look at this market and talk about what are the issues here, we've got many people with phones today, over 5 billion. So what can we do really with those phones? Payments are a large challenge. They don't have bank accounts. And so when I go to a lot of these countries, I carry a bag of cash with me. I convert it to local currency, and then I have an even larger bag of cash that I'm carrying around with nowhere to put it. And so now that mobile money exists, when I'm in a country with mobile money, I immediately convert all of my cash into my phone so that I can start carrying that money around and making payments. But I'm stuck in a lot of countries where that doesn't exist, of lugging cash around from day to day. Now, that hasn't always been possible. On the continent of Africa, for example, in 2003, only 3% of the population had access to a phone. By 2014, we're going to have more than 72% of the population with phones. 80% of the world today is already covered by the network, so phones are becoming ubiquitous and the method to actually reach this population. So what can we do with 5 billion phones? When we went into these markets, we looked to figure out, okay, what exactly do people need and how are they using phones and what can we take them to the next level? So we came across 5 different areas: agriculture, education, healthcare, jobs, and finance overlaps all of these. We created several programs to adapt to this, as well as 2 application laboratories to really understand how can we help this market move and advance itself. So what's unique in all of this? One is our approach and how we do this. And we really do this through partnerships with large organizations. And it's a focus on the poor, and it's a business model that works from the bottom up and from the top down. So we use mobile phones to not only collect and disseminate information, we use it to transfer money to impact their lives and livelihoods. And I'm going to walk you real briefly through this approach using the example of agriculture, of how we go about developing an app to understand exactly what people need and use. So first we go into villages to understand what information do people need, and then looking at themselves as well to understand what exactly can they afford to pay for, would they be willing to pay for, and how do they get that information today. We go back and validate some of that information using sources that exist. It's not only do people not have access to bank accounts, but information is very hard to come by as well. So it's usually via radio. So what information are we accessing via the radio today that we could actually now put on the phone? So we've taken a lot of this information, adapted it to the mobile phone, and now we're putting it out in the villages and testing and scaling the ones that really work well. Now, what does this have to do with mobile payments? We've taken some of these apps, and I just want to give you a few examples so that you can see what's actually why we're creating this and then how it links to the payments. So the first one is to help newborns. Most newborns in the developing country die within their first 48 hours. So that's really key to make sure those first 48 hours are the best that they can be so they can grow to have a fulfilling life. And so we've partnered, for example, with babycenter.org. So if any of you have children, you might have followed your pregnancy along the date of the birth of saying, okay, the child is now growing arms and legs. Following your baby's birth, you get a message saying, it's now 4 months, your baby should be rolling over today. In the developing world, you're lucky if you go one time before the birth of your baby. So many women who get kicks in their belly don't know, does that mean the baby's coming? What does that mean? So we're sending messages to the parents. Why the parents? Most owners of phones are the male in the household, so therefore we're getting both of them used to the idea of somebody's new is coming to the family. Another application that we have is weather. Today we don't think a lot about weather because we have easy access to the forecast. But if you spent your entire savings on seeds and planted them, and then the next day it rained and your entire savings washed away, this little app is just what's the weather for the next week. It goes to your local telecom tower to identify what region you're in, and you'll get the weather for the entire week. Farmer's Friend is another one, helping people understand, okay, my crops are sick. What can I do to fix that? So it's bringing information that we can easily get here in the developed world on the internet and bringing it to the villager. But we're dealing with people who have limited access to, or limited education, very not literate. So we're marrying this business model with other pieces. So in this particular case, you have an individual who's nominated by their village and trained and sent out with a Java-enabled phone. And so they recognize different plants. They're not experts, but they can send the right information through the phone and take pictures of it to capture it, to come back with crush ashes with caterpillars and put it at the base of your tomato plant. So it's not things that say go out and buy fertilizer or something that one wouldn't have access to, but local resources. And a last one, using an interface of human and a machine. We're taking Java-enabled phones, and this lower one in the lower right-hand corner is having someone go into a small village or area to talk about, okay, what are your job skills and what can you do? And marrying that with different jobs that are out there. We call different companies. They'll come in and say, here are the job opportunities in this region, and they'll get an SMS push out to them. The payments come into this, for example, in the job-related one, is the subscribers to the service pay a very small fee to access this. And then we see really shortly that their income triples very fast by now having access to jobs, which we don't have today. Taking this to the next step of mobile financial services, in the developed world, we have a lot of people who haven't used a phone for very long. Again, the phones have only been there for less than 7 years. So they've gone a long way already, starting to use it as a voice mechanism, then taking it to the front of them, using it for information. And so now we want to go to that next level of actually getting them to use it for banking services. So today the business models are very challenging. If somebody for a microfinance institution, for example, sends in their weekly deposit of the equivalent of about $2, they might pay 20 cents for that service, which when you're a very poor person is too high. So how do we make these services available to more people so that they can share phones? Because despite the fact that we have 5 billion phones, we still have a large population that shares phones as well. So how do we make these services work for people who are sharing the same phone but want the same services on those phones? Developing tools that work to that, and then as well developing linkages between the tools and the telecom operators who have these services and the banks that serve the populations as well. I'm going to talk real briefly about Mpesa. So your Swahili lesson for the day is pesa means money. And this is something that a lot of you might not have heard of, but 20% of their GDP is forecasted to go through this system this year. It started in March of 2007, and there's already been $1.7 billion going through this system. And it's really changing the landscape, but three things really came together for Mpesa to really work. There's a huge unmet need. When I wanted to send money home to someone in my village, I'd have to give it to someone on the bus company, who then would give it to a taxi man or a bicycle, who would then take their share. And so each level down the road to get it back to my village, somebody took a cut out of it. And so having it now available on the phone and having money being able to go directly to the village was a huge money and time saving. So it helped people really want to adopt it faster. Secondly, a unique model and how the user design is, and I'll show you that in just a minute, but how they set up the model. So the user experience is quite unique. If you're a brand new person never using the system before, you don't have a phone, I can send you money to your village and then it's free for you to go collect it. And that experience was so great that you're going to want to keep using it. Except for me to send that money to you, I had to pay for that, and it was quite costly for me to send that to you. So I'm going to convince you to use the system as well. So that helps speed up uptake on the system. And then the third piece of this, which is really the unique system of how M-Pesa really grew much faster than other systems out there today, is the amount of access points. In order to make mobile payments work, accessibility is critical for this. M-Pesa has over 20,000 cash-in and cash-out points. So in the village, you can go to a little entity and get your money directly. Just as a comparison, 20,000 access points, there's 1,500 ATMs in the country. So this is the way to really get your money. It's not through the banks, it's through points like this. So marrying the two of those together will be key in the future. But people won't adopt these services if it's not easy to get your cash in and out. And it's not actually cheap to get money into villages, so transporting cash is quite costly, but it's a very cash-based society. To register as an Mpesa agent, you need to register. Key to registering is having a national ID. Here we don't really think about national IDs because we all have birth certificates. But in most of the developing world, proving you exist is challenging. So that's one element that limits the uptake of systems like these. Another one is the business model and the transaction costs. It needs to work for all sides. So it needs to be cheap enough so that there's no other alternative that a customer wouldn't use. And then for the telecom operator, the third party, or the bank, it needs to work on their side as well. So how's it being used today? For the majority, there's about 28% of the people just sending money. 25% of the people are receiving money. So that means that there's some money in a holding pattern there. Purchasing airtime is about 22%. So why is that so high? That's the first feature that people are used to using in the developing world. They started out with scratch cards and then went to virtual airtime. So it's a service that they're comfortable with. They understand how to use it. And even though on your menu you have many other options, this is the one everybody knows, so they're just comfortable using it. There are other things that they could be using the phone for, but they're not doing that today because they don't know what else exists out there. The money that's kind of in a holding pattern is being used for emergencies, for paying bills, and for other entrepreneurial activities, to buy money from, or to buy goods and services from small suppliers. Companies are starting to use it to pay salaries direct into the accounts. And then government-to-person payments is another big one coming up. Many of you saw during the earthquake in Haiti, money being sent in through the phone systems, and so how that became a major medium to access the population. And moving forward, that's a big way for welfare payments, or for example, in Latin America, many families benefit from a social payment. They get their kids' health care and have regular attendance at school. They send money to all of these people, and it's not actually easy getting money out to everyone to make sure that that system grows. So it's marrying the two of those. Now, why is it so easy to use? Or one of the key elements of making it have a high uptake is it is easy to use. You simply need to remember a phone number, be able to put in your numbers, and then the hardest piece of all of this is actually your PIN. So understanding why this should be secret, why you shouldn't share it. And for individuals who've never used a phone before, they don't understand that piece of it. And so I'm going to give my phone to my nephew who's more comfortable using a phone. He'll get to see how much money I have, and then I realize I can't trust my nephew when I figure out how the system works. So there's multiple choices on this menu. You can pay bills, you can transfer money, you can withdraw cash, you can also withdraw cash from an ATM. You can buy goods and services, and then you can find out information for your account. So in this particular example, it's how to withdraw cash. So you simply put in the other party's phone number, the amount, and PIN number. And then it shows you on the screen, so it understands that if you mess this up, it's your own fault. That here's what you're trying to do, so make sure that's correct. And then you'll get a message, and then the agent who's actually going to pay you out in the cash gets a message. This works via SMS, so very simple and easy to use. We occasionally have challenges with the network, but the maximum time one would ever wait is about 10 minutes. But usually it is real time and immediate. Now, what I want to take you through is just to give you a real-life view of what's happening out there so that you can see it from the user's perspective. It'll kind of give you an idea of why Mpesa could be so popular and how most people are living their lives today. So I'm going to take you to visit Beth in a microfinance institution just outside of Nairobi, a major urban area, and what a day in her life looks like. She works about 12 hours a day. A loan officer at a microfinance institution is not an educated person, but they play many roles. They collect payments, so they act as a cashier. They're a business advisor. They also are the repo person, if they have to seize things. They're the auctioneer to sell off those, to collect cash. So you have many jobs in one. So Beth starts out her day going through all of these files, and that paper is going to stay behind there because we don't have a lot of computers in these areas. So we're using paper for many things. So she goes through to figure out who owes money today in the groups that I'm going out to visit. She then goes outside, and please note what she's wearing on her feet. This is the end of the rainy season, but she's doing her job dressed just like you and me in a business office, but you're going to see that this is going to get a little dirtier as we go along. She, in this case, gets to take a taxi. In many countries, you jump on a motorcycle or a bicycle, or you walk, so she's lucky that there's taxis. But the taxi only gets her so far. So she's on the back of the bicycle in the back there, riding to go meet her clients. Now, I've traipsed with her up to my knees before, so she does a lot to do her job, and she's not paid very well for this either. She gets to her meeting, and these women meet, depending on the organization, once a week, once a month. And during this meeting, everybody knows what's going on in the meeting. We are counting up cash, and if you are in a country where the annual income is $250, in this little meeting, we might have $1,000 on the table. So everybody knows what's happening in this little meeting. So they spend a lot of time counting cash. On average, it's about 45 minutes of a 2-hour meeting just counting cash and verifying that we've got the right amount. And after the women take out their loans and and are ready to leave the room, they have to stuff that money in their clothes so that when they go out, nobody knows that they got money. But again, everybody knows what they're in this meeting for. She then goes back to her office, counts the money once again. So we've just gone through a 12-hour day, which we spend a majority of it riding out to go meet clients, and then a bigger chunk of it just counting cash. So mobile money can really make a big difference in the lives of her business in general and the lives of many others. So today when we look at this space, where are we today? We're still in the developing world getting people to start to use these products. So we're looking to increase adoption and making sure that the products and services are quite relevant to this market. So we have many products and services today that work for this market from the developed world, but they need to be readapted and really understood from the client level up, not pushing products down and looking to solve a problem, but looking at the problems and coming up with solutions to solve those problems. And as we start to grow with this, we can start to marry these ecosystems and linking the banking systems to the mobile money systems so that all of this can grow together, so that people at the base of the pyramids can start to use the same systems that we do as well. They already leapfrog phones, and they leapfrog fixed lines. So here we're just going to go from a mobile phone to a bank account much faster as well. And so we look to organizations to help us as volunteers and to help us understand what types of apps and build those apps to make it relevant for this audience. And we invite you to come visit. You will get stuck in the mud and you'll get dirty, but you'll be able to make a difference. Thank you.
Thank you, Elizabeth. So just to summarize, hopefully you've got a sense that it is an incredible opportunity. It's happening now. I think last year Mpesa moved roughly equivalent of 11% of their GDP, and as Elizabeth mentioned, they are expected to move 20% of Kenya's GDP through Mpesa this year. That, I think, is amazing. So at PayPal, we're looking at partnering with organizations, developers all over the world in emerging markets, see how we can add value in this. And clearly PayPal's capabilities in these different markets vary by region, but we're pretty excited about this and would love to talk to you more about this after the session as well. So we'd like to open it up for questions and answers. And before you ask your question, please provide your name and the organization you're representing. Thanks.
There's a microphone coming your way in just a second. Thank you.
Hi, Chris from First National Bank in South Africa. One of the challenges is cross-border remittances and these micropayments. So in South Africa to Zimbabwe remittance corridor is one of the most lucrative in the region. But the challenge, first of all, exchange controls. and that these users are trying to get money cross-border. So KYC is one thing, but you've got regulators on top of that. And giving the money to the taxi driver is possibly the most efficient way of getting the money to Zimbabwe. And the guy's going to deliver it to your mother, 2-3 days later, but she'll get it less all the cuts. How's PayPal looking at playing in these spaces? Because the power of Mpesa is that in Kenya, it's the preferred payment method. You can't pay someone. Mpesa just launched in South Africa, but you can't do a cross-border Mpesa payment. Is PayPal looking at bridging that gap, or are they wanting to play in the local markets for person-to-person payments?
Sure. So if you look at how PayPal has expanded globally, right? Our first wave was, okay, let's enable payments on eBay. So domestically, if you look at, so if you go to paypal.com/worldwide, you'd get a sense of our capabilities in terms of we've got about 24 holding currencies, and we're present in varying capacities in 190 markets. So the first way for expansion was eBay, wherever eBay is, North America, Western Europe, let's enable domestic currencies there. The next phase was cross-border. So enabling small merchants, let's say in India, in Latin America, who are selling on eBay and needing to withdraw funds into their bank accounts. So that's what we've kind of enabled from a cross-border perspective right now. It's primarily about merchant payments. And then the third wave of growth is what we're exploring right now with partners, is how do we get domestically relevant? So there are kind of some of the local currencies that we've enabled, Mexico, Brazil, etc. So that's kind of where we're looking at domestic partnerships for the example you just mentioned, which is kind of domestic movements of money, whether it's merchants or things like send payments. Related to that is kind of the whole cross-border angle, but we're fundamentally focusing right now more on kind of the merchant side of things. But clearly we look at partnerships, and from a regulatory and compliance perspective, to the extent that there are partners who are willing and able to work with us in doing some of these local kind of know your customer, EML, all those things, then we'd be happy to explore that. But it's more on a case-by-case basis. Other questions?
Hi, Iran River. In a place that the annual income is $250, what's the revenue opportunity per subscriber?
So for ARPUs have come down tremendously over time, but we still have, they've changed the model a little bit. And ARPU is average revenue per subscriber. Instead of doing it on volume, it's per transaction. So there's all of these small transactions. For Mpesa, for example, the average transaction is $33, but over 50% of those are under $10. So on all of these little small transactions, they're making a cut on it.
I'm Katrina Judge with the LDS Church, and they do a lot of stuff with the kind of people you're talking about. And so I had a question about your medical, where you say you use the apps to be able to provide basic medical information. Can you tell me how that's going, as far as what you're doing with that and how successful that is?
So currently we have two different programs. The first one is with the Ministry of Health in Ghana, and what we've done is worked with them and midwives. So a lot of these things work in partnership with something else. It's not sufficient sometimes just to put the phone in someone's hand. And so on this one, it's a young program that just only started probably in June, but we're getting, I think that we already have over 4,000 users of it already, and we've only tested it in Northeast Ghana. And so it's these partnerships are key to making it work, and then making sure that the information is trusted and relevant to the end user. The second one that we have is in partnership with another local company here in California, And that particular one, what we're doing is information push. A lot of people are afraid to ask doctors questions. And so what they'll do is send a message via SMS, kind of like asking the internet, how do I do this in the case of AIDS? So we have a huge database of questions that continues to build every day and sending information back and forth.
Is there a question here?
Hey, Dave Birch, Consult Hyperion. I want to ask about the position of Mpesa relative to... So Mpesa is our poster child, and we're very proud of what we did on that. But there's a unique combination of circumstances.
Exactly.
And one of them, I have to be honest and say, is that it had 5 million customers before the regulators really got involved. And a real barrier to spreading this kind of prosperity in many emerging markets is that the regulators are more inclined to protect the incumbent banks than to think about the bigger picture. And I wonder if there's some way that PayPal might be able to help to show that there are regulated alternatives to conventional banking. So in other words, the innovation that perhaps should come out of this discussion isn't really about technology. It's regulation is the problem. It's the barrier to helping a lot of these people. And I just wanted to make that clear for the audience. Thank you.
No, I think your point is dead on, and I think what we're doing is in many of these markets we're actively engaging with the regulators, and the piece about the neutrality that we bring in, that we can kind of bring in these different disparate networks and kind of become the glue, and there's kind of no closed loop systems of sorts that start evolving. I think that's a very healthy discussion, and there are a lot of markets where the regulators are, as you said, leaning more towards a bank-led model rather than a telco-led model, but and that's kind of where the timelines of different nations kind of stand in terms of the adoption or introduction of mobile money. But that's a discussion that we, along with a lot of kind of folks in the ecosystem, are trying to have as many levels as possible. Absolutely.
And more just to comment on that, we worked quite closely with PayPal in South Africa with the regulator to get the PayPal solution approved there. And our experience with the regulators has not been one of trying to protect banks. In fact, they're trying to, in many cases, over-regulate the banking industry, but putting pressure on us to develop solutions for emerging markets. So they're saying that you can do great things if you're focusing on the underbanked and the unbanked. And I think there's also a distinction to make. There's that banks typically focus on underbanked, not on the unbanked. So what they're also working with is the mobile companies to try and understand where does that balance lie, because the mobile guys are starting to behave like banks and banks starting to behave like mobile. So to try and find that balance, and I think regulators get a bit of an unfair criticism here. The challenge is for everyone to work together, for corporates to start saying, how can we collaborate? So, for example, PayPal and Mpesa, if those two could get together, you suddenly got cross-border remittance into Kenya and then to distribute via Mpesa. It's that last leg, and my experience working with regulators, that they are trying to help.
I suppose we should involve the rest of the audience in the discussion. I have to mention one point you made. South Africa is a perfect example, which is Mpesa wasn't allowed to launch in South Africa. It had to be launched through a bank. And I think given the historic flexibility and innovation that we associate with banks, that's reflected in a marketplace trajectory. So unless we can break the connection between payments and banks, telcos aren't behaving like banks. M-Pesa isn't a bank. Safaricom isn't a bank. It very clearly isn't. Unless we can work harder to separate payments from banking, which is a historical accident, we're going to get stuck in this forever. In most places, India is the perfect example, one of the biggest potential markets for mobile payments in the world. There's absolutely nothing happening there because the regulators insist that everything has to be done through the existing banks. So I feel justified in saying we should complain a bit more.
It's a question for PayPal. As you look to be more domestically relevant in these emerging markets, do you view PayPal as competing with the telcos? I mean, a lot of telcos have their own efforts, maybe not yet as successful as Mpesa. But do you see yourself as competing with those efforts, or how do you see yourself in those emerging markets?
No, I don't see us competing. I think it's certainly in a spirit of collaboration. We've actually been approached by a lot of telcos in emerging markets. And not just emerging markets, even in developed markets. If you look at what the telcos have historically been great at is kind of payments for digital content on the phone, so ringtones, wallpapers, things like that. But when your average transaction size starts getting higher and you're getting into kind of real physical world commerce, then they do realize that they don't have the systems in place, whether it's the risk and fraud management, what have you. I mean, it's been 10 years of PayPal's kind of a robust system that scales that they very much want to partner with as they realize this huge opportunity. By 2014, there's going to be more people accessing the internet through a mobile device than the PC, right? So they are. It's taken them a little longer than what we would have hoped for, but certainly they are coming to us in saying, how can we partner with you? And we're actively building solutions that are relevant for them.
This is a question for Elizabeth. My name is Tom Boswin. The question is on microfinance institutions and what role you mentioned that the agent network is obviously plays a major role in the success of mobile banking. And I'm wondering what your thoughts on microfinance institutions playing a role in that, and potentially a follow-up question being how PayPal could potentially play a role in some of the interbank transactions that could be happening.
Okay. One of the issues that I mentioned earlier is liquidity and getting cash out into the rural areas. So microfinance institutions can play a unique role there. They're actually out in those rural areas already, and they have cash flows coming in and out. So I've seen several good examples of microfinance institutions acting as agents. Another interesting case that we've seen, for example, in Latin America, microfinance institutions understanding the high cost to actually integrate and automate into the different telco systems. It's very costly for them. So they've actually come together and pooled their resources to build their own middleware. But we see lots of opportunities there to create interfaces so that each individual institution doesn't have to pay on its own to link into the larger systems. Especially as we look at markets where there's multiple telecom operators, it's very costly to build a bridge into each one of those.
So I think to answer your question about in that microfinance context, how could PayPal play a role? I think so what they need from a microfinance standpoint is a platform that integrates to these multiple systems, and through our adaptive payments and our kind of PayPal X platform, there are ways in which we can plug these systems in. The question really is, from the use case standpoint, it would be just like you do a mobile payment with PayPal here, maybe not on a smartphone, but some of the alternate access channels that I mentioned, SMS, USSD. So that is kind of fairly synergistic in terms of the platform as well as the use case delivery on. We still want to partner with someone who does the actual credit decisioning, but the disbursement and the collections, that movement of a stored value account from a mobile payments perspective is certainly what PayPal can enable. So I think we have time for one last question.
Hi, Kishore Journal at Yahoo. First, let me congratulate you on the good work that you're doing. Knowing that these are microtransactions and whatnot, how's your contra revenue on these things? What's the fraud patterns like?
Sorry, can you repeat it? What's
the contra revenue or the fraud? The fraud, how does it look?
The fraud.
Yeah. The fraudulent transactions, people who think you gave it but not.
So we've got, so our loss rates, without getting into specific details, the PayPal fraud rates are lowest in the industry if you kind of benchmark other credit cards and things like that. And the beauty of the PayPal system is that every transaction, last year itself we processed over $72 billion in transactions. So, and as you probably heard in the keynote today, we've got specific products in the digital goods and kind of the micropayments space. So with every transaction, the system learns, the system anticipates some of these fraud that might happen and kind of resolves it in most cases before it even happens. So I think we still have a lot to learn and evolve our models, but that's kind of part of the secret sauce that PayPal has is kind of risk and fraud management at kind of different levels of transaction sizes and use cases. All right, I guess that's it for this session. Thank you very much. My name is Amol Patel, and if you have any follow-up questions, feel free to contact me. Thank you.